What's up everyone, it's Kadi with MoneyVest. So in this video, I'm going to break down exactly what Professor Demodran said. There was an interview with CNBC about a couple days ago that I wanted to break down precisely his analysis on the market, which he also did mention the markets are currently about 9 to 10% overvalued at the moment. And of course, took a lot of stab at the Magnificent 7 companies, the core tech, the big tech, which obviously makes up over 30% of the entire S&P 500. So hope you all are doing great and had a great weekend. Make sure that you drop a like and don't forget to subscribe to the channel if you're just joining us for the first time. The links to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the members only private videos. Again, this right here is going to the Patreon. There is a 16% annual discount that's available until the end of February, and you can access over 46 lectures, tutorials, members only private videos, including Excel spreadsheets, and a lot of other Discord channels, including trade alerts, options alerts, buy and sell alerts. Everything's going to be included. I did post a members only video a couple days ago, my entire shopping list with the 12 stocks that I'm most excited to buy, with my buy targets as well, along with my ETFs that I'm looking dollar cost average into. And do connect with me on Instagram as well. My handle is going to be CAS@WRP, and would love to connect with you there also. So first things first, let's talk a little bit about the exact interview. So this right here was the entire interview. All of Magnificent 7 stocks look overpriced, and one of them definitely stands out more than the others. And is the market overvalued? And yes, Professor Demodran mentioned that the markets are indeed overvalued about 9 to 10% at the moment. And these are some of the intrinsic values that he has, which we're going to come back to towards the end of the video, which I've found very, very interesting. A lot of them are significantly higher than where I would put them. But of course, he's the dean of valuation, so I definitely do refer to his analysis and his valuations as well. The one thing that is true is Tesla. For Tesla, he and I are almost always on the same page. There is a slight discrepancy right now. He sees the fair value for Tesla in the 180s. I see it in the 150s. So it's about a $30 discrepancy. But nonetheless, that's usually the range which he and I are kind of mostly agreed on when it comes to Tesla's valuation. Now, first things first, he mentioned that all Magnificent 7 stocks are overpriced with a few exceptions, but NVIDIA currently stands out. And of course, Magnificent 7 accounts for 30% of the entire S&P 500 weighting, 11% of the revenues, and 27% of the gross profits. And NVIDIA's valuation right now is pricing in perfection, right? So competition's heating up, and analyst expectations have just gone insane with respect to earnings and revenue multiples. And that's one of the things that I've highlighted before as well, right? A lot of people in the comments on YouTube may kind of find it hard to believe, and they may comment that, NVIDIA's valuation is still quite reasonable in the 30s. And even in the 35s, why do you think that NVIDIA is overvalued? Well, the thing is that NVIDIA's expectations for earnings have just skyrocketed, right? Analysts all over the world, including, some of the most popular ones on Wall Street, have created this optimism that NVIDIA is, again, the key dominant player in artificial intelligence. It's the one end-all, be-all player in generative AI. And as a result, it's going to capture all the market share. Earnings are going to skyrocket, and the valuation looks really, really low. That's why that 32 times multiple on a forward basis doesn't seem like that crazy. But that's exactly Professor Demodran's point, right? That's exactly Professor's point. And he says that maybe I'm just missing some part of the story, but it's just I can't calculate the fair value to be in the 700s. That's exactly what the stock price is. To me, it makes no sense. And at some point, he says the reality is going to play out, and it's not going to match those expectations, is what he also believes, because analyst expectations, of course, are really, really high. NVIDIA is priced for perfection. And similar to NVIDIA, he also talks about Microsoft, and he says, of course, that he's a long-term owner of Microsoft, and looking at $400 per share, a lot has to go right for this price to be the right price. And that line right there was so true. It hits home, because this is something that we have talked about as well. When a lot of these companies price for perfection, meaning that they are priced for everything going right, and if there's any type of sort of discrepancy between what the actual reality is, the market is going to open up to that unpleasant surprises down the road, which of course could bring the stock price lower. So we've gone, very, very parabolic. We've gone vertically higher for AMD as well, for NVIDIA, for Microsoft, for a lot of these big tech Magnificent 7 companies. And when you look at the real valuations of these businesses, certainly, he and I are on the same page talking about how valuations just do not make sense, regardless of how bullish we are on these companies, right? Regardless of how much I believe that these companies are the future, they're going to do really well. I own most of them. even through broad-based ETFs as well. So I want them to do well. So here's the difference also that I think a lot of people on YouTube find it difficult to believe. Just because the valuations are high and I'm calling it out that valuations are expensive does not mean that I'm bearish or I'm shorting the stock, right? Lots of people in the comments sometimes say that, Caddy, why are you so bearish? Why are you shorting these companies? Not really. My goal here is to provide you with a very clear, objective analysis of where the markets are, regardless of what my personal biases might be. And I'm here to tell you the truth. I want these companies to go up another 100%. I want these stocks to keep ripping higher. Nothing would make me more happy and more rich if these stocks keep pushing higher. I want that to happen. But at the same time, we have to have some level of clear understanding of what valuations are, where they are, and what's the potential downside, what's the risk associated with these types of rallies. And last but not least, he does talk about Tesla and Apple, which again, I fully agree with. Even in my market update videos, I talked about how Tesla and Apple are somewhat neutral. I kind of clubbed AMD in that as well. And even Google, that one could argue are somewhat fairly priced, I would say. I mean, Apple, maybe not so much. He's got a fair value at 170s. The last update that I did, I think it came around 140s. And for Tesla, it came around 150s. He's got Tesla at 180s. So he does say that, one could argue that they're somewhat fairly priced and could buy and get some exposure in those stocks and of course, that particular sector. And these right here are going to be some of the fair values that Professor Demodron has, right? Intrinsic values. And this is one of the most recent videos that I got from 3 days ago. Alphabet, which is Google, 138. I've got Google at around low 100s. Amazon, 155. I think I might be in the 120s. Apple, he's got 176. I've got Apple in the 160s as a dollar cost averaging opportunity. From a technical basis, again, the fair value for me is going to be a little bit lower. Microsoft, he's got 350s. I think that's fairly true. I think that's a good price point. And then we got Meta at 445. I think Meta 445 is actually a little bit on the higher end, I would argue. And then NVIDIA 436, I think I'm also in the low 400s. And Tesla, I'm in the 150s, as you guys already know. He's got Tesla at 183. So these are some of the intrinsic values. And again, most of the times when it comes to valuations, he's also conservative. I'm also very conservative with our estimates. And that's what makes sense. That's really what's going to drive long-term gains, in my opinion, because our goal, at the end of the day, our goal is to be conservative and right than to be aggressive and wrong. Because if you're super optimistic, if you're super aggressive, you're betting on the best case scenario, and if there's any chance that that does not happen, then you're opening yourself up to huge disappointment. I'd much rather be conservative and open myself up to huge upside surprises, and that's the cherry on top if everything works out. And if everything is even better than what I expect it to be, then that's a great, pleasant surprise. But if the market expectations are way too high and the stocks sort of underdeliver, then of course that's going to lead to an unpleasant surprise, or disappointment rather, which could lead for the markets and the stocks to roll over and start selling off. But that's obviously going to create more opportunities for us to dollar cost average into investors who are more conservative and are going to wait for the prices to come to us. So that's the entire analysis. And even Josh Brown trimmed NVIDIA. There was also a sort of a clip from Josh Brown saying that NVIDIA shares are, NVIDIA shares he basically trimmed, citing too much optimism around generative AI. And there's a lot of analysts that have absolutely gone mad, putting expectations and targets up to $800, $850, $900 per share on NVIDIA. And of course, those expectations are absolutely ridiculous, according to Josh Brown and Professor Demodron as well. As I've mentioned before, analysts chase price action. They don't chase earnings, or they don't chase the fundamentals. They chase price action. As price action goes up, all of a sudden the stock becomes more favorable. All of a sudden the stock becomes more valuable, more covered, more sort of everything, right? As soon as stock price is going down, analysts run for the hills. They are done. They are going to downgrade the stock. They're going to cut prices. And that's how sentiment works. So hope you all enjoyed this video, and let me know your thoughts down in the comment section below. For me personally, I think Tesla, Enphase, Apple, and to some extent even Google are stocks are trading at prices that I would still consider reasonably priced and positioned technically. But when it comes to NVIDIA, Microsoft, Meta, Amazon, I just can't see myself dollar cost averaging at these prices at the moment. So make sure that you drop a like, subscribe to the channel. As always, links going to be down below for our Discord and our Patreon. We'd love to have you on board. Join, 16% annual discount available for a few more weeks here. So links going to be down below. As always, happy investing. I'll see you all in the next video.